I'm going to say something that I feel like a lot of people don't want to hear. And I think...
Speak your truth.
I think that sometimes more money can be making us poor. And sometimes more money is a trap. Welcome. This is For Better and Worth,
The podcast where we don't believe you have to sacrifice your relationship while you grow and build your net worth.
We are your hosts.
I'm Chris.
And I'm Erica Young. And we're so glad you're joining us today.
All right, y'all, let's get into it.
The For Better and Worth podcast is sponsored by American Heritage Credit Union, a not-for-profit credit union that helps you take control of your financial future.
As a member of American Heritage, you're an owner. You'll be charged fewer fees, earn more in the form of dividends on your accounts, and have access to lower rates on loans.
Whether your goal is to save for a down payment on a home, create an emergency fund, or build for the retirement you've always dreamed of, American Heritage has the products, resources, and solutions you need.
After all, American Heritage is for the people, not for profit. So to learn more, go to ahcu.co/for better and worth.
Hey, honey, how are you?
I'm doing good. How are you?
I'm good. I am good. I'm glad that it is sunny, that the rain has stayed away, and I can't wait to get outside and enjoy it. So
I know we were looking at vacations and planning and stuff, and some places, like the summer is the rainy season for them. Mm-hmm. Then I was like, we live in the rainy season too.
Oh my gosh, it has been so rainy.
It was like, I tried to go for a bike ride. I was like, I'm not gonna be out riding my bike in the rain. I had to wait for the rain to subside. And then it rained a little bit, and I was like, you know what? I'm in it.
So isn't it enough rain? Like, I'm done with it.
Right. Look, I've been saving on my water bill because I haven't been needing to water the grass because nature has been watering the grass.
Yeah, that's true.
But let it get hot, and my grass started to have any variation of color change. Boy, them sprinklers are gonna be
all the time. So today
I turn into like an old man like that. Because
listen,
my yard, I pull up, I have to see the lines and stripes, and it has to be green.
I'm gonna let you have that because it's beautiful. Our yard is beautiful, and I care much less than you do.
Yeah, it's all right. We won't both have to care the same way.
That's right. But I'm excited about what we're talking about because we were discussing this a couple days ago. And I feel like if you can imagine a dog chasing its tail and going in circles and circles and circles, or a cat who, when you're giving them a toy to try and reach for or jump for, and you keep making it go higher and you keep making it go higher. I feel like that's what this is.
On the hamster wheel.
That's it, right? So this whole concept that we never have enough money because the goalpost continues to move. And I just want us to address the whole idea that, you know, more money isn't always the answer. And we have to figure out what problem it is we're really trying to solve and solve that versus thinking that money answers all.
Yeah, I think about that too because like sometimes it makes me stop and you know, take inventory. Is like, what am I really chasing, or what is it that I see people chasing? And part of that could be inflation because what you could buy today is a lot different than what you could buy, you know, 10, 15 years ago, 20 years ago. And I use one metric kind of as my barometer. Like I even think about the price of cars today. Like we buy used cars. So we typically feel like we have access to a lot of different cars because we do buy used cars. But the price of new cars, it is through the roof. Mm-hmm. Like going out and buying an SUV, and I see these SUVs on the road all the time. Tahoes and Yukons and even Escalades. Those cars are $90,000, $100,000, $110,000.
Yeah, see, that's on a different level right there. Like I can't even fathom it.
Okay, well, let's just go back to a Honda Accord or some of these other cars. You know, cars are like $30,000, $40,000.
They're expensive.
To just get into the game in a lot of ways, but everybody wants an SUV. So I use that as a barometer just because a Yukon, if you spend $40,000, $50,000 like years ago, to me, that was a lot. But now to walk on a car dealership lot and you want to buy a pickup truck and it's $85,000, I'm like, when did cars start costing this much?
So I guess what I'm wondering then, okay, so if we're talking about our income per se, our income or salaries is never enough.
Yeah.
What you're saying is the economy is making it such that everything is so expensive that we need more in order to at least keep up or have the same standard of living.
I also think people's lifestyle has increased and we chase lifestyle in a lot of ways because you don't have to have a GMC Sierra Denali pickup truck when you could go get something that is a base model or, you know, something that is just less. And people don't want to often pivot to the less. They always want the more.
So I'm going to say something that I feel like a lot of people don't want to hear. And I think...
Speak your truth.
I think that sometimes more money can be making us poor. And by poor, I mean, like, more money doesn't make you go to the next level in other areas of your life. It means you end up having less cash flow in order to do the things on a daily basis that you normally would. And so I just want to toy with that concept a little bit that, like, sometimes more money is a trap.
I would agree with that because I've always felt, and I've always, you know, I was told by different people, and just over the years, money doesn't change you. Money just amplifies more of who you already are. You know, so if you're a person who doesn't manage money well with a little bit of money, you're going to be a person who doesn't manage money well with a whole lot of money.
Right. So fix the behavior and the mentality and your value system.
Right.
As you know, moving through life, no matter how much money you make.
I remember my mom, when we were younger, she didn't make a whole lot of money. But and it's so funny, like, she would use her checkbook, but my mom, she would use the what I call the envelope system. And she would be writing her stuff out on the back of an envelope, like, all the time.
She was never wasting paper.
She'd be like, pop, pop, writing it out, and she'd be adding it up, and then she'd use her check register, which nobody uses a check register anymore, but she'd be like figuring it out, and she did not waste money, and she was very value conscious. So I knew that even with a little bit of money, she managed that well. So with a lot of money, she might need some direction on some things to do. With a large sum of money, just, you know, from an investment strategy perspective, but she would have been counting all those dollars and pennies, and she would have been like, no, I know. She would have known where that money was. So,
I feel like my mother is the same way. She writes down, she's very meticulous about...
your mama very old school.
She is very old school, but same, like your mom too, right?
They both were old school.
Yes, like they don't use the technology to manage their money, right? And so...
My mom is deceased now, and I look at your mom, and she called the bank, and she like... listening to
and but she writes everything down. She's very meticulous about how she does it, but she's very consistent. Okay, and so she doesn't allow days to go by without knowing how much is in her account, what she has available, all the things. And so
but that's why it goes kind of with what you said about is money making us poor, because what's the alternate side to that? If people aren't being meticulous like that with a little or a lot, what would you say?
I mean, they're spending more money. Well, the thing is that I think that more money is making you poor, or could be, I'll say it that way, could be making you poor because it gives you license. You think that you can spend more. And so then it robs you of the cash flow opportunities that you might have if you had more money and you did not spend more.
Right.
So I think it's making you cash poor versus truly poor, right? Where you don't have any money at all and no assets.
You know, we had a friend who was in the NFL, and he played on a couple teams in the NFL. And he had like, I don't know, a money market account or something that was kind of his savings where he had a bulk of money. And he was like, yeah, as long as it's within a certain, like a $10,000 margin, he was like, yeah, I'm good. I was like, what do you mean? Like, as long as it's within $10,000, you're good. Because I was like, that's poor money management.
Right.
If you have, a big enough account, and as long as it's within a $10,000 margin, you're like, well, I'm okay.
I think people don't want to get into the details. They don't want to it takes time. And it actually takes you knowing a little bit about money to know if you are within some healthy boundaries. So people don't want to do the work to see the reality. So that is it's a cop out. I'm gonna just say it, okay? It's a cop out to decide, all right, if this is the way that I want to just see it, like as long as it's within this range, then I should be good, right? It means that you don't have to be held accountable to your behaviors with money or how you're spending. And so you've given yourself an out and you're pretending like it's working. And the truth is that I think this is one solve. I'm not saying it's the total solve, but it's one solve for when you make more money and not being cash poor, is to actually ensure that the extra money is going towards one of your financial goals that are helping you to advance. Yeah. If you do that, then you're in a good spot. But if you just are making more money to out earn stupid behavior, stupidity, then we got a problem. So I'm sorry, I wasn't real nice there, but that's real.
Look, it raised eyebrows for me when I was like, how are you? No, you need to get more specific and know, because as somebody could be squandering money out of his account, a few thousand at a time. And if they're doing that frequently, but it's within that 10,000 range of what he thought was normal, he could be losing out on funds. I mean, not saying that was happening, but it gets to the heart and the root of the other behavior. But I personally think, and we were talking about this, I work corporately and I've seen people leave our organization, go to other places. And over the years, I've just seen people, chase the bigger salaries or chase whatever it was, that could be appealing to go to another employer. And typically it's money. And I always count and assess the cost of what making transitions what they cost you.
Yeah.
Because if you go and you get more money, I'm like, okay, more money is one thing, but what else am I sacrificing? What equity am I losing from a relational perspective? What equity am I losing from, advocacy, from leaders that I trust and know and believe in them, and they believe in me.
Because the thing is people leave jobs because of their manager or their direct the person that they report to directly, more so than the work that they are actually doing.
Right. And money is an incentive to get you to leave when you're having some of those problems. And so I kind of do it in reverse. I was like, okay, even if somebody offered me, X number of dollars, I would have to say, well, hold on, time out. Let me do an assessment of my current situation and see if it necessitates the need to make that transition, because I might be leaving some of those things I said. I might be leaving corporate equity or advocacy or sponsorship or, other benefits that I receive that the money, though it's good, I'm not gonna turn no money down now. Let's be clear. I'm gonna take the money. But I might not chase that money and allow that money to be the only factor. When someone says, oh, I made $30,000, $40,000 more, that is great. But what did you sacrifice? Or, I often see how it's good initially, but long term, what's the longevity?
Yeah.
And for me, longevity is important because, I'd rather know that what I'm doing is going to be sustained longer term versus a quick flash in the pan.
It's the old saying, the devil you know.
Yes.
It's better than the devil you don't.
And I'm not saying that you shouldn't take chances or risks sometimes, because there there are situations where you should step out and take chances and take risks, because sometimes there can be huge financial payoffs on the other side. So I think you have to just use your emotional intelligence and know which time is the right time to do something. But people typically let money be the motivator because it can give them access to more lifestyle, or really just more stuff.
So that's the other part of it, is that more stuff could mean more debt. So like the more money you earn, the more, the higher your credit limits can be, or the more, the higher the auto loan can be, or the bigger house that you can purchase. And we would love for that to always, that's fun. I mean, honestly, sometimes buying stuff is fun. Let's just be real. And I'm really averse. I don't like spending big amounts of money, but I do like spending little amounts of money. And so,
but you have your threshold.
I do.
I think I was laughing, like you're like, sometimes spending money is fun. I was like, yeah, in small bursts, rapidly.
I don't like big bursts of money going out.
You could do your small.
Case in point, I came back from a trip. You said to me that we had $2,000 in car repairs. And I was like, swallow, okay.
I said potentially because
I know, but you showed me the estimate, and so
that's all you saw.
And I was just like, okay, so this needs to be done. This. Okay, now we can have a conversation. But in my mind, I'm like, there ain't no way I'm trying to pay $2,000, and then so I'm like grabbing air, moving my head. In my head, I'm doing this. And like, wait a minute, hold on.
I'm like, let me walk you through what is necessary.
And so in my mind, I'm like, what we could, I already knew the budget. I already knew where we were and all the things. And I'm like, okay, so a portion could be this month and then the rest of it could be next month. But I knew, this is how I know that you are a person, like you're the person who negotiates. When it concerns the cars, you're on top of it. When it concerns a home repair, you're on top of it. Like, you will ensure we're getting a good deal. So I had no reservations or hesitations about the fact that we may not pay $2,000. But the other part of this was, I'm a person who, I am very triggered by sticker shock. So I had to swallow my words, because I was like, in my head, we don't need to do that. Like, hold on, like, isn't there another way? Like, wait a minute. And so I had to like back up and say, okay.
I'm not moved by any of
You are not. And so for me, I'm like, okay, I want to make sure that I'm listening to what it is that you are saying, so that I'm not projecting my hesitancy to spend the money when it turns out that $2,000 might be actually how much?
Like $800.
Yeah, that's a big difference.
Yeah.
And so
and that's why I was like, don't worry about it, because you zoomed in and saw the big number. I was like, that's not even fully accurate.
And I was asking you a bunch of questions, and you were like, enough already. Like just let me explain. And I was just like, so this is what we had, like, because we were having a money meeting. And I found myself getting into the weeds when I didn't have full information. And so, but anyway, the point of the matter is that, bigger numbers, I think part of it is I'm not moved by them.
I disagree.
And what I'm saying is, in terms of more income.
Oh, okay.
But when it's to be spent, I am definitely moved by it.
That's so interesting. Like how, you get excited when you're closing business and you bring contracts in, but I was like, I'm thinking of leaving here and going there, and I'm gonna make, significantly more. You're like, oh, okay. Like, you don't get excited about it, but let me show you a $2,000 car repair. You're like, oh my God, what's going on?
Exactly. And I know I'm different. I know, like, but the thing is that I know myself, and
not that I'm looking to go anywhere.
I'm not interested. I'm not impressed. I think what it is I'm not impressed by bigger income numbers.
Yeah.
And then I'm also nervous about spending bigger numbers. And so I'm real conservative in that way. I kind of have my little bubble I like to stay in. Now, I do say over time, those numbers have changed. But I will say that is, so for instance, you mentioned a contract. So for me, more income means more contracts, more business, et cetera. And there's this one contract that I just had signed recently. And for this particular year, it's a good amount of money. And I was like, oh, this is great. I like it. But I'm not moved, one, because I have to wait until that money comes in order to start doing the work. And I know, like, I do have to manage my time so that money lasts. Right. Mm-hmm. So my thought process is it's a good amount, it's a good sum, but I have to navigate that for a season.
You still have to budget it.
Yeah.
And I think this is a perfect example of how what we talk about is stuff that we actually do. Mm-hmm. Because we put these principles that we talk about on the podcast into practice for ourselves. Mm-hmm. And even with this example, like, the car, we were like, well, we're planning on buying a new car in 9 months.
A new to us car.
Yeah, because we typically buy used cars. We're going to buy another car in 9 months. So it's like, okay, how much of this do we have to invest? Mm-hmm. How much is like mechanically necessary? Or, so we were just peeling that apart. But sometimes if it's just, more money, you like, oh, just do it. And it's like, it's not even necessary.
Yeah.
And I think that's how people their decision-making process can become impacted when they're just chasing more or they're accessing more, because then you make different decisions. Mm-hmm. And so I think that comes to the part of things that we talk about, less control, because you just like, okay, yeah, do it. Yeah, mm-hmm. Go ahead. Mm-hmm. Yeah, no matter what it is, when you need to really just stop and assess, is this the right thing to do? Mm-hmm. Does this make sense? Is this bringing me, financial stability or happiness? Or is this, I think sometimes more money, it brings more stress.
Mm-hmm. More money, more problems.
Frustration, more management.
More responsibility.
Yeah, all of the above. Mm-hmm. And so sometimes, while, look, I want people to go out and make more money because I want it to remove those things.
Yeah.
Not remove the responsibility, but remove the stressors or, the negative side mm-hmm. of things. But I don't want people chasing more money in hopes of just, accessing more stuff. Because, I like stuff. Don't get me wrong. But I think everything has its time in its place.
So here's the thing. When it's a corporate job or just a job in general, every year you expect your income to go up a little bit, at least due to inflation, if not promotions or movement in other ways, right? And so I think it's reasonable to know that, to believe and expect that your income is going to go up routinely.
Mm-hmm. I agree with that.
And I think that, like, the other part of it is just, making moves just to make more money because you think it's fixing issues. Because if that is the case, I think, as you stated, that other issues could be coming up, or money should not be the only deciding factor in making a move. And so I think the thing that...
At the end of the day, a job is a job.
Yeah. I think...
Our daughter found that out because she left a job where she was very frustrated with some things, and she went to a job where I can see a change in her whole person and demeanor, she's excited, but then she's realizing that, oh, this is a job as well. Mm-hmm. There's things that you may not be on the top 10 of, I like this the most about the new job, but I think that comes with the territory.
Mm-hmm. And I think the challenge that people don't think about, I feel like it's a blind spot for most people, is that more money gives you more access. You can do more, meaning mm-hmm. you can have access to more debt. You can potentially afford the house, or at least a mortgage company might say that you can get a bigger house and another car.
Doesn't mean you always should.
That's the bottom line. And so I think our whole idea of never enough can put us into a chokehold. And I think that is a major issue. And there was a part of me at one point, not recently, but just some years back, I would probably say 10 years ago, let's say, you wanted to get to this level financially, or I should say with your income, and then another level with an income. And it did feel like the goalpost was moving as you climb the ladder. And I think that is a trap a lot of people can be caught in. I do think you're pretty balanced, and obviously you've grown and you've basically said that there's more to a job than just the money that's made. But like when the goalpost keeps moving, I would just tend to step back and say, why isn't what you have enough? Because when you slow down and you evaluate and say, why do I want this? Or do we need this? Is this necessary? It begins to put a different light on it. But if you, just because you can, should you? Like, I think that is a real important question to answer for a lot of people.
I think that's a very good point of view. And as you know, having been married to me for a long time and knowing me pretty well, I've always been a very ambitious guy.
Yeah.
And I've always sought after, more responsibility, and income comes with more responsibility, and so I've always tried to have the point of view and perspective that I want to chase the responsibility, I want to chase success, and all the rewards will come with that. Mm-hmm. But, as you reach those levels and, you look at your life, you have to make different decisions and different assessments, because now I'm like, okay, I'm in a different phase of life where I want to enjoy different things that require my time. And so then I started to put time at a premium. And it's like, okay, if time is a premium, I need to know how to navigate my work-life balance. And, is more money, more responsibility the thing that I want? Or am I at a point where it's a fine balance? And I think that's where people make the mistake. They don't always make that assessment. It's like, I'm just going.
Right.
The acquisition mode. And, the longer you live and the more that we all come to deal with our own mortality, I think it really just starts to change your point of view.
Yeah.
Because we've lost a lot of family members in a 10-year span, and the focus just shifts to me. And so I'm focused more on the quality and not the quantity.
Well, and you know what? Okay, so that's a good point, because what this also makes me think about on my end, because my worldview is shaped by being a self-employed person for 20 years. And in that realm, all money isn't good money. So we don't necessarily think about that when we're talking about corporate work and climbing the ladder.
That's one of those old grandma phrases.
Yeah, it is.
All money ain't good money.
It's true. And so I get to pick and choose who my clients are and the terms of our work together.
Yeah.
And so sometimes that means maybe I'm not the person at this phase in that process for that client, corporate or personal, whatever. And so when I'm thinking about success, it isn't just monetary, it is also the impact that is made, the connections, how I'm able to help transform a workplace or a credit union or individually a family's, financial life. And I don't have to say yes to every opportunity. I can be particular about who I go after and where I continue to have these conversations, but I don't actually have to go after everything.
Right.
And I think that a person in corporate America can also have their own boundaries, guidelines, or what success looks like in their mind, so that they're not taking on any opportunity as well. I just don't think that we see it the same. We assume we need to climb ladders. Like for instance, the work that you're doing right now, you're not managing people. And I think a lot of times people see the next step as you need to manage people in order to climb the ladder.
No.
And you used to manage people.
Yes.
And you are
not managing people now is great.
You're at a director level and you don't have to manage people and you enjoy what you do.
I love it.
And so my whole thing is, define success on your own terms and
Yes.
figure out what it looks like so that you are satisfied, content, and that you know you either have enough of what you need in terms of goods and also income, but that when you have an opportunity in front of you to make more, that's fine to go after, but not only because it is more money.
You know, as you're sitting here, I got to go back to my core, and you know, everything I do in life, I always go to the Word, and you know, I let that align my decision making. And I always go back to, what was that, Habakkuk, and it talks about count the costs. Yeah,
Oh, no.
Habakkuk 2.
Oh, no. Oh, those are in the Gospels.
Yeah, but it talks about counting the costs. And, you know, he who buildeth,
Yeah.
you have to count the cost before you build
Yes.
so that you know that you are able to finish.
Yes, that's in Luke. Yes.
And so I go back, Habakkuk is bring ye.
No, Habakkuk is Habakkuk 2:2.
Yeah.
Oh, that's oh, I don't know what it is.
Look it, look. We gotta
Look it up.
now because
Oh,
my phone.
no. Yes, that
Right.
is. I'll look it up for you. Go ahead.
But anyway, you know, we're getting into the scriptures now.
In case you wanted to know.
Right. But you got to count the costs. And sometimes I think counting the cost means, you know, strategizing and thinking about, okay, what does it require to live?
So Habakkuk is write the vision and make it plain upon tablets.
Yes.
Right?
So it all goes together. I knew where I was going, but I just needed a little guidance.
You had a brain freeze.
Right, because it's that vision that helps you set the course and direction to determine if what will be enough. Because sometimes people don't do that. You don't write the vision, you don't make it plain, and you can't run with it.
So write the vision, make it plain upon tablets is in Habakkuk. And Luke 14 is where it says, which of you intending to build a tower does not first count the cost?
First count the cost.
Right. And so, yeah, I get it. Like, that's like, think about that.
Both of those things go in tandem, because if you don't count the costs and know what it's going to cost to complete, and when I say complete, you know, that could be retirement, that could be, you know, a purchase, that could be anything, debt elimination. And then if you don't write the vision to align to the costs, then you'll make decisions that could put you all over the board.
That's good.
Because I think like now I'm thinking like, okay, well, what does retirement look like? How do we want to live in retirement? What income will that require? How long do we have to work? How much do we need to save? How much do we need to make? And it's literally counting all of those costs so that we can assign a vision to it, and that we both can get online with that long-term plan and strategy that helps us to navigate down the road to get us where we want to be, so that when we come to the end of the project has been fully funded.
So thank you, Brother Chris, Reverend Dr. Deacon Young. I don't have an offering plate to pass around. But I'm gonna get to my make it worth it, because I feel like the thing that is important for anyone listening or watching to understand is that you likely have enough for where you are right now. If you count the cost of what it takes to do the things you need to do, and then you create the game plan, which is building, you know, doing the building, right, of all the things. And then if there is a gap, one, since we are here on the spiritual aspect, believe God for it, pray, and all the things. And in the natural, do what you need to do, but don't allow society or external factors to make you feel like you never have enough, or that you have to go the path that everyone else is going. You can chart your own course, and you get to choose. And I think that sometimes we can allow the acquisition of more to keep us from realizing that we are satisfied, content with what we have, and more isn't necessarily needed, or the purpose of what you might be going after it for is different. And so I just say, make an assessment about what enough is. You know what I mean? Redefine what enough is. And that, I think, is an ongoing process. But I think it's important because you and I have had these conversations over and over about what that looks like for you and your work and what it looks like for me and my work. And I think it's an important missed conversation.
I think that's a good make it worth it. So thank you for sharing that. And I think people who have done that well is the FIRE community.
Yeah, they have.
The FIRE community, financial independence, retire early, they have done this exact thing because they don't necessarily say, I have to have a whole lot more.
Right.
They've decided early what they need in order to access the life that they want.
Exactly.
And they've worked to hit that goal. And I think that is a very good example of why more isn't always necessarily required, because they stay focused and hit that goal and then start to access life in the way that they want to live it.
Yep.
And I think that's a very good example of, what enough could look like.
I agree.
So that's my make it worth it, is look at the examples that are out there and then make your assessment and work towards that. And then live life on the terms that you want to live life on.
That's good.
And so I'll
good.
leave it there.
There you go. Well, this has been good. I really hope that, I feel like for me, this is going to force me to kind of think about some stuff. And I love the whole idea of coming back to not all money is good money. And if you think about that, it can potentially change some of the way you move and your behaviors. So I'm excited. I'm glad that we chose to chat about this.
I think it'll make me think about how many classic cars I need.
Oh my gosh.
Because then, I don't need 10. I'm not Jay Leno. Jay Leno is on a different level.
How many does he have, honey?
A lot.
Jay Leno has a bunch of classic cars.
Yes.
I want to know how many.
Okay.
I'm about to look it up.
We will look offline.
I know. I'm going to look.
Jay Leno has a ton.
Okay. That's funny that you brought him up.
2. Not 200.
Let's see. Oh, shoot. I think I put the wrong thing in here.
So, but
Yeah.
But it's going to make me assess like lifestyle and how much lifestyle do I need.
Wait, what?
Yeah. We'll have to look this up offline.
Wait a minute.
It's going to require a little more.
His cars are worth $52 million.
He has a lot of them.
He has a lot of vehicles.
Yes, he has a lot. And people, you don't even hear his name
anymore.
Really anymore. But
That's funny.
He is a big to-do in the classic car.
That's so funny.
Industry. So
that's so funny. Anyway, that's hilarious.
Yes.
I can't even get with that number on vehicles. That's crazy. So anywho, I hope that you will figure out what your enough is, that you won't always have to figure out or feel like you never have enough.
To search for more. Yeah.
Yes, but this has been good. So until next time,
we're out.
Thank you for spending some of your time with us today.
We appreciate all of your support. So be sure to subscribe, rate, and review us wherever you listen to this podcast.
You can find us on Instagram at For Better and Worth.
And sign up to receive our free guide, The 7 Reasons Your Money Relationship Isn't Working with Your Partner, on forbetterandworth.com.
Until next time, we're out of here.